Good morning, good afternoon, and good evening. I'm Diana, and I'm the Global Blockchain Business Council's Head of Research and Sustainability. It's my pleasure to welcome you to the GBBC's Virtual Members Forum on why enterprises choose Avalanche Subnets. We're a bi-weekly webinar showcasing the innovative work of our members around the world. And today we're joined by Morgan Krupetsky, Director of Business Development for Institutions and Capital Markets, and Lucian Stroie, Senior Technical Project Manager at Ava Labs. Organizations face several roadblocks when considering the adoption of blockchain technology, including concerns around interoperability challenges within existing systems, scalability limitations, and more. During this session, Morgan and Lucian will expand on the capabilities of Avalanche's technology and how it is revolutionizing the way that organizations embrace decentralized solutions as enterprises and institutions alike look to adopt blockchain for new opportunities. We welcome your questions at any point during today's presentation, so please submit them in the Q&A tab at the bottom of your Zoom screen, and we will take them after the presentation. Thank you, Morgan and Lucian, for joining us. I will now hand things over to you to begin.
Sure. Thanks, Diana. Really appreciate the invitation to be here and excited to speak with everyone today. As Diana mentioned, I'm Morgan Krupetsky. I run institutional business development at Ava Labs, and Lucian Stroie joins us today as well from our Subnet implementation team. If you guys could go to the next slide, we'll kind of go through just a high-level kind of agenda. Would really kind of welcome your questions throughout the session. I know we have 15 minutes dedicated to Q&A at the end. So please feel free to kind of throw in questions as we go along. At a high level, what we'll go through today is kind of an introduction to and a little bit of history behind Avalanche, the blockchain protocol, as well as Ava Labs, which is the software company building infrastructure and tooling to really drive forward the growth and adoption of the Avalanche blockchain. We'll talk about Avalanche in a little bit more detail, specifically around differentiators, the kind of overall blockchain architecture of the network itself, as well as subnets, which is really the way that the network has always envisioned to scale, and primarily how we've been kind of onboarding various institutions and enterprises onto blockchain, specifically onto Avalanche. We'll review Ava Studios, which is really the way that we've been kind of hand-holding our institutional and enterprise and other partners through their blockchain and digital asset journeys and building various real-world use cases on Avalanche. And then we'll go a little bit more into detail around the partners we've been working with, some kind of concrete use cases, and then, again, happy to kind of open it up to Q&A after that. So with that, let's dive in. If we can go to awesome, thank you very much. So just taking a step back, Lucian and I are both from Ava Labs. Ava Labs was actually founded by Cornell computer science and distributed systems professor Emin Günsir and his then PhD students, Kevin Seknicki and Ted Yin. Today, Emin is Ava Labs founder and CEO. Kevin is our COO, and Ted is our chief protocol architect. Emin's actually been in the space since the beginning of cryptocurrencies. At Cornell, where they were at the time, the team discovered a report published by a pseudonymous author called Team Rocket in 2018. And the report really introduced what was called Avalanche consensus, which we'll get into in a little bit. But this is really the third ever most novel consensus mechanism after Classical and Nakamoto, and one of really the primary differentiators of Avalanche from its peers, and obviously what the entire platform is named after. From that discovery, the group then went on to build out the Avalanche protocol or platform. As a public blockchain network, Avalanche was formally launched by the Avalanche Foundation on mainnet in September of 2020. So in the grand scheme of things, Avalanche, particularly compared to other chains like Ethereum, is relatively new, but in that period of time, I think has been able to garner a tremendous amount of success and adoption really across many different industries and use cases, including DeFi, NFTs, gaming, enterprises and institutions, which again, we'll talk about in a little bit. Avalanche as a platform is an open source layer 1 blockchain for decentralized applications. Importantly, it's EVM compatible, but ultimately from a broad-based kind of scaling perspective, it's really VM agnostic, which we can go into in a little bit. Because of Avalanche consensus, it's extremely fast. And it enables sub-second transaction finality, which means that transactions are considered final or irreversible within 1 second time, which you can start to see as particularly important or pertinent for financial services use cases. It also has the ability to scale to many, many validators. At this point, the network has over 1,300 validators and the ability to continue growing to many, many more. And because of this, the platform is also able to facilitate the growth of sub-networks or subnets, which in practical terms, we can think of as custom application-specific blockchains. That again, we'll get into more detail later, but they basically allow various companies, whether they're gaming companies, financial institutions, government agencies, or other types of enterprises, to really customize their blockchain for their particular use case. And then Ava Labs, again, is a software company and the licensed service provider to the Avalanche Foundation. At Ava Labs, we build infrastructure and tooling to, again, drive forward the growth and adoption of the Avalanche blockchain. And from a business development perspective, what that means is really partnering with different kind of companies across many different industries as they build on top of or somehow use or participate in the Avalanche ecosystem. If we go on to the next slide, we'll start getting into kind of the more specifics around the key differentiators of Avalanche from a technical perspective. Happy to go into as much detail as possible, but maybe to kick it off with a high level, Lucian, if you want to go into the consensus as well as subnets and customization capabilities, we'll go from there.
Yeah, I'm not going to go into like the computer science specifications of anything related to the implementation details related to consensus algorithms for this call. Instead, I kind of want to talk about the progression of consensus algorithms and why they're important in blockchain in general. Consensus algorithms are, generally speaking, how a distributed group of computers can agree on something. And in blockchain, this typically means that they have to agree on something under the assumption that someone is either trying to trick them or to manipulate them in order to make a part of the network believe something that is not true. So classical consensus has been around since the 1970s. And Bitcoin was actually the first breakthrough in consensus since the 1970s. What Bitcoin brought to the table was that you could have anonymous participants on the internet essentially contributing to the security of a decentralized network. And as you can tell, this has become an extremely powerful tool that everyone has been using in one way or another. However, the way that Bitcoin did it through Nakamoto consensus requires literally an infinite amount of energy to be consumed to increase its security. While it's an incredible breakthrough that has basically kickstarted all of our industry, all of us kind of watched in horror as kind of the value of Bitcoin increased, led to the increase of energy consumption in order to compete for the scarce Bitcoin in response. So the more valuable Bitcoin got, the more energy people were willing to consume in securing the network. And projects like Ethereum very early on set in their initial roadmap that they wanted to move to a different system. And this led to the development of things like proof of stake, but proof of stake is not actually a consensus mechanism. Instead, it's just an answer for allowing permissionless, anonymous participation in an open crypto network. So what Avalanche did was combine some of the innovations brought by Nakamoto consensus, and it combined it with the speed and high throughput of classical consensus, but with a new twist. So Avalanche consensus, I like to describe it simply as the most efficient way to get a large number of computers to agree on anything. And the larger the set, the larger the participation group, the larger the number of validators, the better its performance relative to something like classical consensus will be. That's why Avalanche has 1,300 mainnet validators that vote on every single block and participate in the block of every single consensus, while no other major chain can do it the way that we can. Other blockchains are either capped at 1 to 300 validators, or they go through several rounds of voting in which they have 125 validators participate in validating a specific block, but then going through series and other economic logic like slashing in order to eventually get to consensus. Not only is Avalanche more scalable into the number of participants in the number of validators, but it's also faster. We've done a lot of work to just essentially optimize around this idea of time to finality. In other words, we reach an irreversible conclusion to the state of the network faster than any other blockchain. So once a block is finalized in Avalanche, there is no reorg, there is no longest chain rule, there is no slashing. So it's effectively finalized. And this property is incredibly useful for developers, but also businesses, because you don't have to reason about different periods of time when a transaction can be changed from under you, or that a transaction can actually be invalid, but you only find out a week from now. So things like this just don't happen on Avalanche, and it makes it a really robust and simple platform to reason about. And all of these comparative advantages come from a fundamental breakthrough in computer science that all stems from Avalanche consensus. So it's an important thing to keep in mind for the rest of the feature discussion and the use case discussion that we present. Next slide, please. Thanks. So I once had someone approach me at a conference and they go, why is Avalanche so complicated? Why do you need 3 chains while other blockchains have 1? And part of it is because we can. Avalanche doesn't actually care about the chain that runs on top of our consensus algorithm or our network, as we'll discuss further when we discuss about subnets. Effectively, we have specific chains that specialize for specific things. We don't try to have our contract chain also handle like staking and establishing new blockchains through subnets. That is specifically in the platform chain. It's specifically around coordinating validators, establishing staking periods, and it's built specifically to keep track of like participation sets and rewards in token emissions for these participants. The X chain is another example where we have a UTXO-based blockchain that offers high throughput. And the benefit of having a UTXO chain is that you can have a much faster transactions per second, and there's a lot less state bloat at the expense of having a more complicated developer experience. So the end result is that it's not as widely used as the contract chain, which is the C chain. Most people that interact with Avalanche really only interact with the C chain, which is our EVM compatible chain, where all of our smart contracts are, where DeFi lives, where you can connect with Ethereum-based wallets like MetaMask or Core. And the beauty of having this kind of compatible layer to what has become kind of the most popular developer ecosystem in blockchain is the fact that it becomes really easy to port over projects. And you're able to benefit from the large ecosystem and development and effectively get to production really quickly just by taking all of these already developed standards and just plugging it into a faster blockchain with lower fees and faster throughput. So on the next slide, we then talk about how subnets fall into this as well. Subnets, it's Avalanche's native scaling solution, and a subnet is effectively a sovereign L1 that in which the validators are also validators on Avalanche mainnet. A good way to think about it is a subnet is just a group of validators that agree on anything. The virtual machine is arbitrary. So you could run a move VM on an Avalanche subnet, and you can have something like Sui or Aptos, but with a faster consensus, and you've bootstrapped your validator set through existing validators, and you have interoperability to the larger Avalanche ecosystem. When we designed subnets, we didn't want to choose a winner in the VM wars. We wanted to focus on a level below, which is networking and consensus. And we've spent a lot of time optimizing around that because we feel that that's where the most to gain long-term was. So with subnets, you basically get to spin up your own network and take advantage of all of the improvements that Avalanche has brought while still being composable and part of a larger network of networks. The benefit of subnets goes even deeper because you can bring your own VM and you can also customize your EVM, and you can add compliance rules that are demonstrated by initiatives that Morgan is pushing through, like the Spruce Network and the Evergreen Subnet framework. And these are effectively regulatory compliant blockchains that regulated financial institutions can now build while still being connected to a public network. And as the rules change, since we don't have very good clarity on what exactly these rules are, as these rules change, your network can evolve with it too. And you can add certain quality of life features and security features like controlling who can deploy a smart contract, allowing only whitelisted addresses to transact on your chain, or just customize your economics. You can make the gas token on your network be whatever you want. You can make it valueless. You can make it a token that lives on a completely different chain originally, and only when you bridge it to your subnet can you actually then have gas to transact on the network. This kind of flexibility and this programmability is really important to us because businesses that build on Avalanche don't have to compromise their use case in order to fit the technology. They can make the technology fit the needs of their use case. So this specifically is why most projects build on Avalanche. And this allows us to support large AAA games like Shrapnel and Gunzilla, while at the same time offering the ability for regulated financial institutions or projects like Deloitte to also deploy their own subnets as well. And they all kind of live inside of the Avalanche main network umbrella. So whenever they want to, they could reach out and connect to a public blockchain, access liquidity, access DeFi, add value to the tokens that are on their subnet. However, it's up to them. If they want to have a completely self-contained loyalty reward system that's similar to a credit card point system in which there's no liquidity or external access to cryptocurrency, that's completely an option. You still benefit from the higher security of building on a public blockchain network. But when you want that composability and the liquidity, it's just one native bridge away. Next slide, please.
Maybe I would just,
Yeah, go ahead.
Sorry, can you go to the one right before it? Thank you. I would just maybe also just take a step back and just to reiterate, Subnet, the way that you can kind of think about Avalanche is a network of networks or blockchain of blockchains. And this vision of what's also called horizontal scaling by adding more block space horizontally as opposed to building L2s. Not to say that you can't build L2s on top of Avalanche, but the vision was always, the idea of primarily scaling horizontally through subnets. This idea was embedded into kind of the network target state vision from the beginning. And the idea was that kind of looking ahead from a mass adoption standpoint, the idea was never that a single monolithic chain could support or didn't necessarily make sense for kind of facilitating or hosting not only mass adoption, but also mass adoption across many different industries. So the idea that, for example, a Taylor Swift NFT drop would potentially be able to impede upon from a gas or a transaction cost or operational standpoint, a multi-billion-dollar loan between two transactions just didn't necessarily make sense. And so the idea of subnets is to really allow, whether it's a single company or a consortium of companies that are building a very specific use case to be able to isolate and customize their blockchain environment across a lot of the parameters that Lucian reviewed in a way that kind of optimizes the performance of the blockchain for their particular use case, but at the same time allows them to continue to benefit from public blockchain infrastructure development and innovation, as well as the ability to be interconnected with other kind of like use cases or other comparable or complementary companies or use cases or industries in a way that lets the builder of the use case kind of dictate what that looks like. So we understand that basically if you're a government agency, if you're a financial institution, or if you're a gaming company, as examples, you're going to have very different parameters and considerations for your particular use case. And subnets, with this kind of list here, as well as several others, really allow you to kind of customize that environment and tailor it to your particular use case. Lucian, let me hand it back over to you.
No, that definitely covers a lot of the customization. And it's worth noting that some of this customization is already built into the subnet EVM implementation. So every time a project comes to us with a request of like how to change and make the EVM more flexible and meet their needs, we enable this within our platform. So it's already kind of baked in. The assumption is that when you have your own network, you want to make your own rules, and we're an enabling technology that lets you do that. I'm a part of Ava Studios, which is a implementation team that helps people get to production with subnets. We understand that building production blockchain systems is difficult, and there are a lot of questions that traditional businesses have never actually encountered before, be it like decisions around token economics, decisions around how to establish validator sets, and importantly, like security considerations. People are always kind of like afraid to pull the trigger because they've been messing around on test nets or private networks, and all of a sudden, like they're going on a public network and they hear that it's scary. But we've helped several projects effectively make that step into production with a public network. And it's very enjoyable for us to watch teams that have spent a lot of time and engineering resources building out use cases and then watching them finally like launch onto a public network. And in addition to our team, which does this through like consultation and working through certain problems with your team, we also have a lot of support within the rest of the organization. And we're more of the kind of like client-facing portion of our business, because supporting us is a service that has effectively automated and turned developing and deploying a subnet into kind of a managed service. So you don't even need DevOps personnel within your organization now to deploy your own production subnet. And that's what Ava Cloud is for. And this allows us to effectively spin up a full subnet from configuration all the way to production as quickly as 3 weeks. Most of the time we spend kind of walking clients through options on how they can customize and make it their own and take full ownership so that they can benefit from this type of production infrastructure for themselves. And then there is this ecosystem of products that we call core properties. Avalanche has a wallet that's mobile, extension, and browser-based, and as well as a class-leading bridge built off of SGX technology, which is itself a very interesting piece of tech that only we offer currently, connecting Avalanche mainnet to Ethereum and Bitcoin using a non-custodial wallet, which is unique in the industry. And then we also provide the support services around Avalanche, one of them being Glacier, which is an indexing service, which reduces the amount of back-end code a team needs to build in order to get to production. And at the heart of Avalanche is our platform technology. Avalanche Go is open source tech that anyone can contribute to, independently review the code base, improve upon, make pull requests to, and effectively like make their own if they so desire. As well as some of the leading virtual machines in the industry, Subnet EVM, which is a fork of Go Ethereum, which we've started customizing to make more flexible for end users, but also a set of other virtual machines like HyperSDK, which is a framework for building your own virtual machine, if you're so inclined.
So thanks, Lucian. So when we take a step back and look at Avalanche from an ecosystem development perspective, again, I mentioned that the mainnet launched in September of 2020. And since then, the team has done a great job, I think. And I just joined a year ago, so this preceded me. But the team has done a really great job of ensuring that the platform has been integrated with really key pieces of enterprise and institutional grade infrastructure in order to really kind of facilitate the growth and adoption of the platform really across many different use cases and verticals. So a few examples include the fact that Avalanche is really supported across all major global exchanges, EVM compatible wallets, as well as custodians. You'll see here just a few examples in terms of the integrations from a service provider standpoint, including the likes of BitGo, Fireblocks, Circle, and Coinbase. The network boasts native stablecoins like USDC, USDT, and most recently EuroC from an Avalanche integration. And so overall, that's to say is, the team has spent a lot of time kind of ensuring that the key pieces of infrastructure and architecture have been put in place in order for a variety of different industries and companies to start really building on top of and utilizing the platform, whether from a C chain perspective, which is the smart contract chain that Lucian went over, which is where most of the activity that people, when people think about Avalanche currently occurs, as well as on subnets. And key to this is in an interoperable way where needed or where it's conducive for from a use case perspective. If we can go to the next slide. Thank you. So honing in on the institutions and enterprises part, we can kind of go through some concrete examples. Our business development team from Ava Labs is really split up into kind of 6 different verticals, including exchanges and wallets, DeFi, NFTs and culture, gaming, enterprises, and institutions. And if you think about the different use cases for blockchain, you'll think that, or you'll realize that, not all of these kind of verticals are necessarily mutually exclusive. So, despite the fact that I lead the institutional vertical, I work extremely closely with our DeFi team, in some instances with our enterprise team. So we have a team that works very kind of cohesively together in that way. But if we kind of hone in on the institutional and enterprise side, I think overall, a lot of our partners have ended up kind of choosing to build with us for a variety of different reasons, but that really kind of hone in on both the tech side of the equation as well as the team side of the equation. From a tech perspective, I mean, I think a lot of the kind of differentiators that we outlined has really drawn enterprise and institutional partners to Avalanche, in that it really, again, gives them the best of both public blockchain infrastructure and development with kind of the features and customizability considerations that have historically driven them to launch on what we would call enterprise chains. So from a tech standpoint, whenever we kind of go and deep dive with our partners on the tech side of things, I think, our tech really does stand out in this way. In addition, from a team standpoint, between myself and several others from our team, including our president, John Wu, our head of DeFi, one of our VPs of business development, and others, we have really multiple decades of experience and expertise in the traditional financial services, as well as other parts throughout various enterprises, including consulting. Lucian was actually part of Deloitte before he joined, and other industries. And so I think a lot of us from a business development standpoint, as well as from an Ava Studio standpoint, really have looked at our kind of partnerships very holistically and with a long-term strategic lens, where over time we've really been able to become trusted advisors to our enterprise and institutional partners as we kind of handhold them through their blockchain/digital asset journey, really helping them navigate internal stakeholder kind of buy-in and potential governance committees, as well as a lot of education that we do. Obviously, this webinar being an example of that. So I think between tech and team is really kind of where our success from an institutional enterprise partnership perspective has come. At this point, we have, and we'll go into specifics, but we have enterprise and institutional partners building subnets, both as private sandboxes to really explore different applications across a variety of different use cases, including things like institutional DeFi, or as we call it, on-chain finance, tokenization, and really a whole host of kind of other use cases. But if we go to the next slide, please, thank you. These are just a few examples. I won't go through kind of details of every specific one. Maybe Lucian, if you want to go through Deloitte, I think that's an important one in terms of showcasing some of the capabilities of subnets, and then I can go through a few other examples.
Sure. So the Deloitte platform is a responsible party payment platform that handles document tracking from state and local governments as it rolls up and gets submitted to FEMA for reimbursement requests. The interesting thing about this use case is that it's a government play on increasing the process of collecting and sharing data from disparate systems. So you can think of it as like a multi-party data sharing system that crosses the state, federal, and local levels of government to improve the speed of reimbursements from about 2 years in the best case using the traditional systems to about 2 weeks. So I think it's an important step because I feel that government blockchain use cases specifically, where higher levels of cybersecurity and transparency and auditability are required, I feel that this is a very important project going forward to kind of set the example of how public blockchains effectively can be used by governments to increase the transparency and accountability of how money is spent. So do you want to talk about SK?
Sure. And I would maybe just real quick before we go on, one thing just to note, and we can go through to the extent it's of interest to the audience, we can go through kind of how these various partners used or customized their subnet environment for their use case. But one I think key thing to note in the Deloitte, and frankly, several other subnet examples are is the fact that particularly government entities as well as regulated sell-side financial institutions at this point cannot hold cryptocurrency on their balance sheet for a variety of reasons. And so what subnets allow you to do is customize the gas token that powers the transactions on your particular subnet. So it doesn't necessarily have to be the native token of Avalanche, which is a Vox. It could be either a different cryptocurrency, it could be a stable coin, it could be anything, and it can be something that's valueless, that basically has no value or transferability for that matter outside of the subnet environment, but that really is used to kind of power the transactions on the platform. And this is the case that was used for Deloitte, as well as in several other subnet iterations that are in production, as well as that are in the pipeline. And so this is something that I think a lot of institutions and enterprise are drawn to, just given the kind of current regulatory environment that we find ourselves in, particularly in the United States. The one thing, and then just moving on to SK, which was a subnet that launched in production in the past few weeks. Just for some background, SK Planet is a subsidiary of SK Telecom. It's one of South Korea's largest information and communications technology platforms. Recently, they launched a dedicated subnet called UPTN, which acts really as a Web3 portal for SK Planet's millions of users. As a first step, UPTN has been integrated into SK Planet's OK Cashback program, which is the largest e-commerce loyalty program in South Korea. It includes thousands of businesses and really tens of millions of users. It's almost so widespread that it's close to kind of like a cash equivalent, in that within the current system, you can buy something at a retailer with points, get additional rewards, and then use those points to get a coffee at a kind of completely unrelated coffee shop. So it's pretty pervasive. Through the on-chain deployment, OK Cashback's community will gain access to things like NFTs, unique community features, other membership rewards as a first step. And then the idea is to kind of grow from there. But even within the first kind of few days of deployment, I think they launched with 100,000 transactions and over 30,000 KYC'd users. So I think from an Ava Labs standpoint, we're very excited to have partnered with SK in this way. If you want to move on to the next slide, we can go through some of the more institutionally focused use cases. And when we say institutions, it's really kind of the whole spectrum of financial services institutions, from banks to asset managers, hedge funds, private equity firms, and kind of everyone in between. So these are just some examples. I'll go through kind of a few at a high level. And again, we can go into more specifics during the Q&A, but at a high level, what we've perceived really of interest so far thematically from our institutional partners has really been kind of along two different buckets that are not necessarily mutually exclusive, but that are kind of top of mind for institutions, particularly during the crypto bear market, if you will. The first is all around tokenization. Really the idea of kind of using blockchain rails in the asset issuance or administration process to kind of create efficiencies and cost savings to really, at the end of the day, make smaller deal sizes economically viable for asset issuers, as well as make smaller investment minimums also economically viable for issuers, and therefore really kind of help to drive forward the idea of the democratization of finance. From a tokenization standpoint, we've seen interest really across the whole asset class and liquidity spectrum, from stablecoins, which I mentioned earlier, to reinsurance, to real estate, film, credit, commodities, private equity, so on and so forth. So one example of this was the partnership that we drove forward with Securitize and KKR. KKR had decided to tokenize part of their recent healthcare growth fund on Avalanche, which actually happened on the C chain, and which was facilitated by Securitize. And the idea here was that through the tokenization process, they were really able to lower their investment minimums from the traditional $5 million to something that was much more palatable for individual and accredited investors, and therefore offer these investors the ability to access private equity in a more direct way, where historically they may not have had access to, or just may have found investment minimums historically prohibitively expensive to kind of participate in. And then the same idea spans to Intain, which is a tokenized mortgage-backed security and asset-backed security administration and tokenized marketplace platform on an Avalanche subnet. In this way, through the efficiencies gained through the on-chain administration process, Intain is basically able to make sub $100 million deal sizes economically viable for asset issuers. And then there's listed here some of the partners that they're working with from a traditional financial services standpoint. The second kind of bucket that I think has been really top of mind for institutional participants to date has been what we're calling on-chain finance, which is basically using blockchain rails and DeFi applications. And what I mean by that is the technology and the kind of self-executing applications themselves, as opposed and decoupling that from a lot of the kind of governance and decentralization components that drive public permissionless DeFi, but using these applications and smart contracts to experiment with potentially the ability to upgrade legacy infrastructure and legacy ways of working. So if you think about using, a Uniswap, for example, to power foreign exchange transactions, or using protocols like a Volt to power interest rate swap transactions, really kind of being able to use and benefit from and leverage a lot of the DeFi innovation that has kind of occurred over the past few years, but applying it to the traditional financial services space in a way that allows institutions to test out the merits of using some of these applications, integrating them into kind of institutional workflows and ways of working, and in that way kind of realizing efficiencies from a resource standpoint, from a cost saving standpoint, and ultimately from potentially exploring new kind of avenues of business, new product development perspectives as well. And so this Avalanche Spruce initiative was launched in April to really do just that. Spruce is effectively built as what we call an evergreen subnet. Evergreen subnets at a high level are kind of subnets, productized subnets that we created for institutional blockchain deployments. They have certain features built into the subnet environment that we found were particularly pertinent for financial services institutions. So think about things like a permissioned validator set or a permissioned environment. Also a permissioned environment from a user standpoint, meaning all users have to be KYC'd or KYB'd as an example. Also the idea that the subnet is EVM compatible, which Lucian mentioned is really top of mind at this point, as well as a custom gas token to power the transactions on the network. And so Spruce is an example of an evergreen subnet. It was launched initially with our initial partners, T. Rowe Price, Wisdom Tree, Wellington, and Cumberland. And it's really meant to be a controlled environment for these traditional buy and sell side institutions to come in and really, again, test out various DeFi applications like Aave, like a Volt, like a Uniswap, but to trade traditional assets, to trade things like FX, interest rate swaps. Ultimately, we'll get to things like private market funds and securities, and really kind of start to allow institutions to dip their toe into what it feels like to be on chain, and to really start testing out these different innovations in a way that kind of creates a dynamic dialogue between us and them, as well as them and the various applications, to say, hey, this works, this doesn't work, this needs to be tweaked in order to be fit for purpose from an institutional standpoint, and really to kind of help drive forward the next kind of instance of financial services 3.0 or on-chain finance. So conscious that we just went over a lot, but appreciate everyone kind of listening through our journey through Avalanche, Ava Labs, and the various use cases that we're working on. So I think probably now is a good time to open it up for Q&A. So Diana, maybe let me hand it over to you to kind of lead that out.
Yes. Well, thank you so much, Morgan and Lucian, for a very enlightening discussion on Ava Labs and all the infrastructure behind it, and really how you've spearheaded enabling a very enabling infrastructure for companies and organizations to be able to embrace the trend toward decentralization. We have a number of questions, and I'll start with a participant question, which would be, whilst the subnets are great, how are they actually creating network value on Avalanche versus just for Ava Labs?
Sure. So the token economics around subnets is that while we don't rate limit usage through forcing our native token to be a gas token, we feel that this is actually a major differentiator and a comparative advantage compared to L2s. So with L2s, you still are burning Ethereum, even if it's abstracted through Arbitrum or ZK Syncs token. And regulated institutions simply can't interact on an L2 because they have to hold a cryptocurrency in order to transact on it. And this simply isn't a requirement to use a subnet. In fact, if you've read the latest updates for the development roadmap of every single L2, they're now building L3s for the simple reason that it's hard to compete when the gas token on a subnet is effectively free. So it's not just us that have come to this conclusion. I think it's everyone in the industry. It's just that we're one step ahead. So network value actually comes from aggregating useful, productive use cases on your network, and then having your main network be the connective tissue that gets everything together. So Teleporter or Avalanche warp messaging and its variations is actually the way that all of these successful projects that need access to liquidity and volume, or they need to cash out tokens from their subnet, they're going to go through Avalanche mainnet. And this allows for a sustainable way for valuable transactions to continue to happen and grow on the Avalanche C chain, and while enabling use cases to flourish with zero gas fees. And this combination is, I think, where most L2s will eventually fall upon. And then the question is whether or not the value accrual will come to AVEX as well. In our opinion, I think it will. You can see this by the total network volume increasing substantially, especially when you compare to the volume of other networks, and the number of use cases that we onboard that have real economic value. So long term, I think that the value accrual comes with onboarding financially sustainable applications to build off of your network, and there's no shortcut to it.
I would also just maybe add to that. Thank you, Lucian. I would just add a few things. One, when we look X amount of years ahead and think about the kind of target state, I think there's going to be tens of thousands of subnets, many of which might very well select to use Avax as the gas token, as well as the idea that if you are a subnet validator, you also inherently have to validate the primary network by staking a minimum of 2,000 bucks per validator. And so I think that in addition to everything you mentioned around Avalanche warp messaging, kind of just adds to kind of the utility of the token and broad-based expansion of the network.
Yeah, it's a good point. Well over 60% of Avalanche's liquid token supply is locked up in validators currently. And the more subnets that we onboard, usually I recommend that a subnet has a minimum of 8 mainnet validators, which comes down to about 16,000 AVAX. And in order to continue operating the network, you need to basically have that AVAX locked up in the network in perpetuity. This is actually the long-term solution for Avalanche. Eventually, we will decrease token emissions in AVAX down to 0, but this is in like between 2 to 3 decades from now. This is in our token economics white paper. You can see how this goes. But unlike Bitcoin, which doesn't have a good solution for their reducing security budget, it's becoming quite clear that the utility of subnets themselves is actually going to subsidize the value associated with keeping AVAX locked up. In other words, the utility of subnets and the emission of those tokens is going to effectively support the network when AVAX emissions stop in the long term.
Moving on to the next question. What is your finality? Is your finality the same as atomic settlement for on-chain payments?
So there is an aspect in our consensus algorithm in which finality is actually probabilistic as opposed to absolute. However, the way that we count a transaction as finalized is rather than waiting until you have 3 rounds of communication with every single validator, instead we do multiple rounds of polling. And based on that, it's similar to the way, to the law of large numbers, how it rapidly converges after repeated polling towards the correct value. We essentially achieve finality in a very, very quick way as well, with near certainty. And the security threshold is something that we can set with parameters in the network. So in essence, we have finality determined probabilistically, but we achieve it faster simply by reducing certain requirements. And this becomes really useful because we don't have to speak with absolutely everyone on the network in order to achieve this finality, which also means we don't have to implement slashing logic as well. All of those things actually extend the amount of time required to achieve finality in other systems, while we take this approach that Bitcoin also has probabilistic finality. For example, the more blocks you wait, the higher your security threshold is. And in a similar way for us, the more of the network has decided and finalized on a block, you can choose to wait a little bit longer than the rest of the network, giving you like near certainty on the current state of the network. But again, these are consensus parameters, and it's not necessarily complicated, but it has a very similar impact, very similar outcome to a deterministic finality that's much more speedy, and it's much more comparable to classical consensus as opposed to Nakamoto consensus. In Avalanche, every block is finalized, and our client doesn't actually respond with a finalized transaction unless consensus has already occurred and it is included in the validator set. So this is something else, like you don't have to wait 14 minutes or 5 blocks. The next block, the previous transactions are already finalized.
That's fantastic. How can one engage with Ava Labs? Is spinning up a subnet a pay for service, or can someone apply for grants and cover the cost?
So we've launched a service called Ava Cloud specifically to reduce the barrier to entry for businesses that don't have a DevOps team. So while our software is free and open source, you can use Avalanche CLI to spin up your own local subnet in about 30 seconds. The same tool can take you to testnet and to mainnet. The difference is that you have to configure and deploy your validators yourself, while with Ava Cloud, we offer it as an automated managed service. So it depends on how you want to approach it. If you want to get your hands dirty, our code is there for the taking. There are several projects. In fact, actually, the majority of projects live on Avalanche mainnet with subnets has not coordinated with Ava Labs. But if you would like to coordinate with Ava Labs, our doors are open. If you can reach out to Morgan and get in touch with regards to business development opportunities and grants, or you could reach out to me and I can help you with the engineering and development aspects of subnet setups as well.
And maybe just real quick, just to add to that, from a business development standpoint, we work with really the majority of projects that have deployed on the Avalanche platform, whether on C-Chain or on subnets. You know, and just to kind of emphasize something that Lucian said, we can be as involved or as little involved as needed, just based on kind of you know, what's important to you and what you're looking for from a level of support perspective. To the extent that you don't want to deal with or manage any of the subnet kind of architecture infrastructure, that's precisely why we kind of built out the Ava Cloud offering. In this case, it generally works as like a yearly subscription, but there are credits available, and we kind of look at everything on like a case-by-case basis at this point. So definitely reach out to me, and happy to kind of help you navigate you know, the optimal solution for you based on what you're looking for.
Great. We don't have a lot of time for a lot more questions, so I'm going to ask a final short question to each of you. What are some real world use cases for Avalanche that you are most excited about?
Sure, I'm happy to start. I think for me, I mean, I know the idea of tokenization is not necessarily a new concept, and it regained in popularity at the end of last year for a variety of reasons. However, Ava Labs' stated mission has always been to digitize and tokenize the world's assets, whether financial or otherwise. So it's something that we've been very kind of strategically focused on over the past couple of years, and will continue to be going forward in financial services as well as on the enterprise side with loyalty rewards programs and utility tokens and the like. So it's something that we've been very focused on, and why I'm particularly excited about it is a large majority of our institutional partners are really honing in on the tokenization use case and all of that it enables as well. And so it's something that I'm excited about because it's also top of mind for our institutional partners. And we've seen you know, great progress in the space. A lot of these things, especially when we're talking about financial services infrastructure, don't happen overnight. But it's something that is definitely happening kind of behind the scenes, and something that we're excited to kind of unveil and drive forward in the coming years.
Wonderful. Lucian.
I'm just excited that a lot of use cases that previously haven't been able to make it to mainnet, either because the platforms they were building on weren't flexible enough, or the technical hurdles were too great for them to make it to production, they're finally being realized. So in order of things that I suspect will come to production, I'm excited to see kind of like the loyalty point systems coming out similar to SK. I'm very excited for the next generation of video games that are launching, like Shrapnel and Gunzilla. The ability to have a programmable economy that is fully on-chain with user-owned assets is truly powerful, and we're only starting to scratch the surface. So far, we've basically been limited on the quality of games that could have been developed in the amount of time since the technology has been ready. But I'm really excited to share some of the work that I know has been done in that space. And with a little bit more time and maturity, I'm also incredibly excited by IoT use cases like the Vodafone project that was briefly mentioned in one of our slides, where IoT devices can effectively transmit value from one to the other. So I'm just excited that all of these use cases are leaving testnet and getting to production, and I'm glad that I'm a part of that.
Yeah. Well, thank you so much to Morgan and Lucian and Ava Labs for joining us today. It was a really thoughtful and engaging presentation and Q&A on the trend toward decentralization, how organizations are embracing it, and how you're at the forefront of facilitating this. We look forward to learning more about Avalanche's progress. A recording of this presentation will be circulated to all those who registered and will be shared publicly on GBBC's YouTube channel. Thank you, everyone, and have a great rest of your day.
Thank you. Take care.